Well, happy Monday, traders, and welcome to a huge week of event risk that traders need to navigate this week. The first thing that traders need to navigate is weekend news. So, unfortunately, on the weekend, we saw heightened Middle East tensions again. 12 Israeli children died. Israel is blaming Hezbollah for that. And the issue now is whether or not we see Israel strike back. So it's very hard to be short gold going into the start of this week, because obviously if we do see those headlines that Israel has struck back, gold obviously can be a lot higher. Okay, so for equity traders, there's a lot on as well. We've got four of the big six tech names that represent 40% of the market cap of the S&P actually reporting earnings this week. In the last week we've seen a decent sell-off both in Nasdaq and S&P. So obviously these earnings reports are going to be a huge focus for equity traders. Look, if they come out positive, which they have done, in the last year, we could see a decent rally, in equity indexes and also the single stock names. So moving along, locally we have big news here in Australia. We've got quarter two CPI that's due out on Wednesday. Mark is expecting quarter two CPI to go from 3.6% up to 3.8%. Look, if we do see Aussie CPI come out above expectations, the optics of that certainly are not going to be very good. We've got an RBA meeting coming out on the 6th of August, so no doubt we're going to see a chorus of rate hike views coming out from a lot of analysts. But conversely, if the number comes out below expectations, well, we're going to take that rate hike off the table. So certainly this Aussie CPI number is a big risk event for making this RBA meeting live on the 6th of August. On the same day, we've also got the Bank of Japan meeting. Market's expecting the Bank of Japan to actually raise rates by 10 basis points, and also at the same time cut back on its bond buying program. We have seen a big sell-off in the last week or so of dollar yen, so a lot of yen buying. And a lot of unwinding of cross yen carry trades. The Bank of Japan has had a long history of disappointing the market. So certainly if they did disappoint the market, no doubt market will go back to selling yen. We could see a big move back up in dollar yen. So the Bank of Japan meeting certainly is a live meeting, and certainly we could see some big moves on the back of that. Later on that night, we've got FOMC meeting. The market now has started to price in, rate cuts by the Fed starting in September. So market now will be hoping that the Fed prepares the market for that September cut and maybe subsequent cuts post September. If we do not see the Fed actually prepare the market for rate cuts in September, no doubt we're going to see a huge move US dollar buying, and we're going to see bond yields, especially US 2 yields, going back up. So certainly, obviously, FOMC is going to be another risk event. Okay, and to end the week, we've got US top tier data, so we've got non-farm payrolls to end the week. So what we're looking for there is if we get over 200,000 for a headline and a drop in the unemployment rate, so a strong payrolls, then obviously we're going to start pricing out those rate cuts by the Fed and another strong move in the US dollar north and US bond yields north. Conversely though, if we do see the unemployment rate actually go up above 4.1% and headline employment numbers drop below 200,000 or below 170, market certainly is going to start pricing in more aggressive rate cuts by the Fed. Look, this week is obviously a very hard week to hold directional positions. So I think maybe the best strategy is basically trying to keep it a bit more short term, hit and run. If you've got P&L on the table, might be a good idea to take some off. Anyway, good luck navigating it all, and we'll check back in soon.